to TradeSpoon. My name is Vlad Karpel. I'm CEO and founder of TradeSpoon, and today we're going to have a live trading room open to trade stock and options using TradeSpoon technology. Before we begin, let me know if you guys can hear me and see my screen. We'll begin shortly after. All right, let's start. Welcome to TradeSpoon. My name is Vlad Karpel. I'm CEO and founder of TradeSpoon. And today we're going to have a live trading room open to trade stock and options using TradeSpoon technology. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. This is my brief bio. You can also pause the screen if you need more time. Disclosures are very important. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered as FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. Also, it should not be assumed that the future trade picks will be profitable or will equal past performance, and you can see the relationship between TradeSpoon and trading block on the bottom of your screen. Right, any questions so far? Jax, we do have some change. I will post it. He will be back tomorrow morning. So Scott will be back tomorrow morning and Wednesday. So Wednesday closing bell and Friday morning. I will make sure we'll update the schedule. Let me just make sure to write it down. Remind. Ricardo, I'll talk about EAD, JPT. Jeff, yes. So only one, right? So when he'll be Wednesday afternoon and Friday morning, 2 sessions. Scott will cover, correct? Hello, Elite. Right, I think it was 3 sessions before. Now it'll be 2 sessions. All right. Hello, Elite. All right, let's start. All right, so the question was, let's see. One of the questions was EAD and GPT. EAD. All Spring Income Opportunities Fund. First of all, it's not very liquid. Market forward. So it's not very liquid. I usually would stay. I mean, it does pay you a nice 10% dividend. I would look at what it consists of. But in general, such a small volume, and you know, the stock is down 23%. So it's very close to the market. I mean, 10% dividend is nice. I assume it's going to be very, I mean, I don't know what it consists of, All Spring Income Opportunities Fund. I would look at what it consists of. Let's see. EAD Top Holdings. Let's see. EAD Top Holdings. So it looks like it has some bonds, mostly bonds, corporate bonds with different maturity levels. So obviously this is not something I prefer to do. It's a small volume, but it does pay 10% dividend. I mean, I don't know, John Bonds, let's see, John Bonds is probably better, right? 10 million. Dividend is 5%, so less dividend, but more liquid, right? What was that top to bottom? So instead of 20%, it was down only 12%. So, but obviously highly correlated. My opinion, instead of getting 10%, I'd rather get 5%, but I know that the premium, instead of, 20% drawdown, I have 12% drawdown. So junk bonds, I think strong recovery, very strong rally. My opinion, again, highly correlated to spiders. Highly correlated to spiders. I mean, the question is, are we trading in a bull market, right? Is this a healthy pullback in the bull market, and the bull market will resume, right, in the second half of the year? Or are we trading in the bear market, and this is a rally in the bear market? So choice one, is this a pullback? In bull market, right? That's one choice. The second choice, is this rally in the bear market? And then that's the first choice. The second choice, are you long-term investor? Are you a long-term investor? Or are you, short-term, a couple weeks, or medium-term, maybe a couple months? Aggressive trader. So those are two questions, right? Question number one you need to answer, and then question number two. So why don't we do that? Let's take a pause a little bit. Why don't we go through this? Bob, the 10 and long terms. I trade all time frames. Ricardo, long term. Long term, to me, long term at this point is 2 to 3 years. No, let's say 2 to 3 years. Long term is 2 to 3 years. Right? Asama, short term and long term. Okay. Short term trader. Okay. Anybody else? So I encourage you to think about this question, and in your journal, write it down. Do you consider yourself, in Q1, is it question one? Is it 1 or 2? Right? Did you say 1 or 2 for question 2? And Q2, are you a long-term investor or short-term trader? And those answers will dictate what you should do, right? So there is no such thing as one answer for everybody, right? That doesn't exist. For some people, certain things make sense. So let's go through two scenarios, right? So my answer is that this is a rally in the bear market, right? So my answer is that it's a rally in the bear market. My also answer is I do both. I'm a long-term investor and I'm a short-term, medium-term aggressive trader. So I'm qualified for both. So if you believe that we are in, so I'm going to speak my view. So my view, this is a rally in the bear market, right? It's a rally in the bear market. We had double, kind of a classical double bottom, or undergoing bottoming process, right? Bottom one, bottom two, bottom one, bottom two, and then the neckline, right? So two things is going to happen. We're either going to have, kind of a double bottom, triple the bottom, that happens too, triple bottom, or we're going to break to the upside. I guess we'll find out next week. We'll see next week if bulls are able to hold on, to these levels. So as a short-term aggressive trader, the way I would trade, and my view is that we're in the bear market. I think best case scenario, right? Not the best case, but if I'm looking at the model, right? 6 months model, long-term trends. We see that support is 405.73. Overhead resistance is $453.70 for the months of June. Sorry, for the months of May. Was the negative bear trend. So model basically shows you that long-term, we're trading in the bear market. Support based, this model ran on the first of the months. It basically said support is 405. Overhead resistance 453. In the next few months, we're going to break it and reach 380 level. Based on the war in Ukraine, based on the hawkish statement from the Fed, based on the earnings from Cisco, Walmart, Target, and Amazon, we reached 380 a few months earlier, 2 to 3 months earlier. So the trend is even more negative now. It's even more bearish. The key support right now is 405.73. What used to be a support is now overhead resistance. And we can see clearly this trigger 405.73. We actually reached 407 level. So this level, 408.95, the February low, the May high, right? The May high, the February low is the line in the sand between bulls and bears, right? If we are able to break, if bulls are able to break through this level, then we're back in this equilibrium. Not equilibrium, but in the range identified by Stock Forecast Toolbox, 6 months predictions, where each data point is 1 month. So then I'm looking at this downtrend, and the next level of overhead resistance is clearly 430, right? And that's what the model is basically identifying, that we're going to close somewhere between 417, 420, close at 426, 417 for the months of May and June. I agree with the model. I think that's reasonable to assume that the market is going to top out somewhere between 420, 430 level. Based on the news, we might overshoot this. This was February low, right? February low. Not February low, but January low. Sorry, January low. We might overshoot it to the upside, right? You have 50-day moving average, 200-day moving average, a lot of overhead resistance. So I think market is going to top out somewhere in this region, right? This is the top of the market, right? If you believe that we are in a bear market. By definition, bear market is the pattern of lower highs. We topped out at 480, next level was 460, next major level is somewhere between, this was 20 points lower. It's reasonable to assume another 20 points lower. So somewhere between 440 and 430, this is the top, right? So as we approach 420, 430, 420, I would consider going short. Right? So if you're a long-term investor, right? If you're a long-term investor, like Ricardo asked me, he has a long-term horizon. We're trading at 404. I think in the next months we might reach 430, 440. It's about, another 5-10% rally, 5 to 10% rally. So you go long, right? You buy. You're aggressive. If you're aggressive short-term trader, disciplined aggressive short-term trader, you go long and you try to catch another 5 to 10% rally, right? And as we reach 430, 440, you go short. If you're not aggressive short-term trader, you haven't traded, we've been trading 6 months in the bear market, right? 6 months. Last time we traded 6 months in downward market was 2008 and then 2002. 2008, it took a year to bottom out. 2002, it took 3 years. We'll see how long it's going to take now, right? But most likely this is not the bottom, and eventually, we will break this bottom to the downside. Right, eventually, I don't know, August, October, not a good month for the market. July, August, not good months for the market. It could happen at any of these points. Right? Don't know when, but this. So if you're a long-term investor and you're not aggressive trader, and you basically saying, Vlad, nobody can call the bottom. Nobody knows. So then the strategy could be a little bit differently, right? You're getting 10% dividend, right? You're getting 10% dividend. It is down 20% like S&P. I basically, my thought process is that I don't know where I have to these things. So we bottomed at 212 in March of 2020, right? And we're also bottomed at 212 in December of 2018. Those are the biggest pullback in the past decade, right? So it's reasonable to assume that we're probably going to bottom somewhere in this region, right? Amazon, Google, Tesla, they already reached 50% retracement. A lot of stocks already reached pre-pandemic high, right? And a lot of analysts basically think that, between now and end of the year, we might reach 314, 345. So somewhere between this level is going to be the bottom, right? This is probably the bottom. Nobody knows until we see, certain price action, but this is a good candidate for the bottom. And, usually, that would mean that the market pulls back somewhere, somewhere between 30 and maybe 35%, maybe 40, slightly more. And that's usually bear market, like prolonged bear market. In 2008, it was 55%. In 2003, it was 50%. It could be 40%. You can look at the chart of all the recessions and bear market and when it steps out. So if you're long-term investor, you basically say, Vlad, I don't know where is the bottom. Nobody knows. It could be here, it could be here, it could be here. Then as a long-term investor, you're getting 10% dividend. Then ideally you buy here, right? You buy at 380 here. You buy at 340 here, and you buy at 320. It's a collection of junk bonds, not junk bonds, those are B-rated bonds. Those companies most likely are not going anywhere, right? They're probably not going anywhere. The EAD stock. So you buy at this level, you buy at this level, and you buy at this level. Since you also don't know where the bottom is, the idea is at this point, you do not want to be down more than 2.5% of your account value. Because I assume this is not the only stock you're going to have. I propose to have 4 stocks at 2.5%, 10%, right? If the market, I have a strong conviction that market will reach 350 or 320 level. I know those levels, I don't want to be down more than 10%. If you're a new trader, if you may be an experienced trader and you have higher risk tolerance level, okay, maybe 20% down. But if you're down more than 10 to 20%, most likely, even if the stock pays you a dividend, but you're down 40% of your principal, you will capitulate, right? You will close your position at 320 only to see kind of a multi-year rally, right? We have generation of traders wiped out in 2008 and 2020. Literally, depends on when you traded. People were holding their position when the market was down 20. They held it when it was down 40. But then, once it dropped here or here, that's when they capitulated, they're down 40-50% of their money, never to trade again, only to see, decade of market, going from 110 to 400, right? It happens to almost all the traders. How do you avoid this situation, right? Since you don't know where the bottom is, how do you avoid it? The only solution I found that I can suggest is very simple. 4 positions, 2.5%. Be very careful, just like Warren Buffett say, whatever you want to buy long-term as a long-term investor, for the next few months, everything is highly correlated. You only have 4 shots. If that's EAD, then that's great. If it's EAD and GPMT, also great. But if every day it's something new, right? If every day it's new stocks, and you're going to have 10 stocks or 8 stocks, and they're going to be down not 2.5%, but 5%, that's when you're going to, probably going to stop trading and not trade for a very long time. So my goal is to avoid the situation. My goal that wherever the bottom is, one thing I know for a fact, right? Probably for a fact, unless we have some cataclysmic changes, at some point market will be higher than 483, right? That is probably a fact, right? Since market was created, it always goes higher. It never goes all the time lower, right? So it is reasonable to assume that spiders will be higher, and this is a one in a decade or one in a 20-year opportunity for the investors. What does it mean? Cash preservations. Wherever is the bottom, nobody's going to know exactly when the bottom is, but you'll know where the bottoming process is, right? If you look at 2008, you didn't have to call the bottom correctly, but even if you bought it in September of 08, right, or if you bought it in November of 08, and it was another 10% down, we were close to the bottom, right? We went through this bottoming process. Week 1, week 2, week 3, week 4, week 5. We're not making any lows, right? Then we rally, and then you buy, right? Because this is like a good buy level, right? Can it drop another 10%? Sure, or 15%, but you're close to the bottom. Right now, I don't think we're close to the bottom, right? We haven't traded week 5 or 6 weeks at this level, right, at 24%. Once we reach 340 or 380 and 5 weeks, we're not making new lows, I would say, okay, we're close to the bottom. This is where a long-term investor, this is going to be an opportunity. So the goal, when we do reach this level, not to be down more than 10 to 20%. That is my number one goal. So hopefully that answers your question. Attending Bob Ricardo, long-term. I trade all time frame, short-term, long-term. Ricardo, okay, 1-1. Thank you. Short-term. 90s, so yes, 90s, 2003, yeah. GPMT. Granite want mortgage, again, very low volume. My thought process that in the bear market, you do not want to trade anything that's illiquid, right? Anything that trades in 1,000 shares, very easily manipulated, right? We haven't had any VIX, we haven't had any capitulation, and you know what happened in February 20? It's down 100%. That is because there's no liquidity, right? So, and we haven't had VIX jump to, VIX very complacent. Market is at 27, QQQ is down 30%. The bulls are still stubbornly, persistent, right? We will have an event, I think. I do have an opinion that we're going to have an event. We might not reach 80, what did we reach in 2008? In 2010, we reached 50. 2010, we reached 50. 2008, we reached also 80, 70. So the VIX will be higher than 40, right? It might not be at 80, but it might be at 50, at 60. When VIX is at 50 and 60, one thing I also know almost with 90% certainty that GPMT is going to do something like this, right? So my proposal is that you do not trade anything that's not liquid, right? Because when there's a panic in the market and there's no liquidity when VIX is at 20, at VIX 30, you will not find any buyers. And there is no bottom. So I propose not to trade GPMT. I propose not to trade whatever that other thing was, EAD, right? EAD, right? I do like the yield. That's very attractive. Okay, there's other vehicles. You can do junk bonds. They pay you 5%, but at least there's 10 million shares. You know it's not going to be down 100%. It might be down, 20%, right? But not 100%, right? For half of the yield, that makes more sense. And in terms of mortgage, Bob, what's the good mortgage stock? I mean, I trade VNQ, real estate bonds. I mean, it pays 3%, right? But I know that it's not going to drop more than 40%, right? So stay with something liquid, millions of shares. If you want something PHK closed-end fund, also very low volume. I don't know, Bob, you have a good real estate fund that's liquid, that worth, what is it, CCK? No, CC. CCI pays 4% dividend, also not very liquid, unfortunately, but at least $82 billion and looks a lot better than the others. So Ricardo, hopefully that answers your question. We're gonna go to the all right. Let's see. Yeah, Bob. Yeah, tips pay you 10%, but only 10,000. We talked about tip bonds. Bob, CIM. I don't know if it's any better. I know you like it. I mean, it's more liquid. I like it. It's 14% liquid, CIM. The other one was 100% down. This one was, it's also 73% down. It's probably also closed-end fund, right? I assume it's a closed-end fund. So when liquidity dries out, it's elevator down, right? So for that reason, I'm not going to recommend stock like that. All right. But anyway, all right, so let's go through the positions. So FCX, right? If you don't like to trade stock options, FCX, I'm long FCX, I bought a stock. We have 2 weeks, down, retest of the support level, right? Come close to the support level. Week 1, higher highs. Higher lows, almost the same highs, higher high, higher low. Second week, dollar is dropping, right? Dollar continues to go lower. It should be a good environment for precious metals and commodities and, the whole complex of XME, right? XME is a little bit outperforming. I think it has a little bit more room to the upside. I do have FCX position. For now, no changes. Right, you can go to TradeSpoon, Elite Trading Circle, Trader Log. So bought at 38.34 and trying to close at $40 and $43. QQQ. So QQQ, I closed the short call position. I have a butterfly, right? So I'm short 280 put, and I'm long 270 put and 290 put. Still slightly bearish. I think at this point, we do have a confirmation that the bottom has been set, right? Short term, 380 is the bottom, right? I don't think we're going to revisit this level anytime soon, not in the next couple of weeks. Looks like 388 is the next support level. If, first is 398 and then 387. So I think still there is probably 15 points to the downside and maybe 25 points to the upside. So I'm going to convert this from credit put spread From butterfly, continue to lower the slab, right? So it's 235. Looks like we're holding on to the gains. So I'm going to close the QQQ. I'm going to close the slab. I rolled it from 300 to 290. I'm going to close it. And instead, I'm going to buy the second contract of $275 put. So being from slightly bearish on QQQ spread before, now that we have, I think the bottom is set, right? I know what my losses are. Right, so I closed the 390 put for $27, bought 290 put for 22. Now I'm closing 290 put. I don't need this for now. I don't need this hedge, and I'm buying 275 put. Right, reducing my risk and by another $5. And now I have a credit put spread, because with the idea that the market is going to continue to go higher in the next few weeks. So that's QQQ. So from being slightly bearish, I'm now becoming slightly bullish. SH, right? If you cannot short, right? A lot of people don't like to short market, or they don't like to trade options. One way to hedge your portfolio is inverse ETF like SH, right? So I've been trading SH. Right, I bought it at 1527, closed at 1597, closed at 1650. I'm going to trade this around this position. I will see. If I see that next few hours we are trading below 397, then maybe I will add it to SH. But as long as we're above 397, I think bulls are in control, right? I think bulls are in control. So for now, I'm holding. So that's SH. Silver, we talked about silver. Weaker dollar should benefit emerging market. It's off of its lows. It's back above this breakout line. I think gold miners and silver, they should follow the other metals and miners, right? They should follow the other metals and miners. So that's silver. No changes to silver. Spiders, I'm long spiders, I'm long QQQ, right? Continues to trade higher, facing overhead resistance. So if you're not, again, this is an example, you either trade options or you trade stocks, right? Those are the two choices. So this is the reason why, I have a QQQ stock and I also have a spiders position, because a lot of people don't trade options, right? So I wouldn't do both. You only have 4 positions. But this is an example. And then I would look at overall portfolio beta, right? Right now, spiders are up 2%. If you're up 4%, right, then what does it mean? That if we do drop back to 380, which would be, 6% drop or 7% drop, if you're up 4%, then you're going to be down 14%. So it's probably you're over leveraged, so maybe it makes sense to trim some of your long positions, because we are facing overhead resistance, a large overhead resistance, right? So it makes sense to trim some of your long positions. If market is up 2% and you up only 2% or you up only 1%, then maybe you don't need to trim your long position, because I think it's just a matter of time for this level to be broken. It might not happen this week, but maybe by the end of next week or in the next 2 weeks, I think this level will be broken, and then we will retest 430. So this is an opportunity to trim some of this position in case, in case short term, right? In case short term market does something like this, right? Market could drop here, right, and rebound. we can drop 2-3%. So if you want to try to catch that moment, okay, then maybe it makes sense to trim. Let's see what I have. Maybe I'll trim. I think I have spiders. Still have big spiders position. Not big, but so I can trim this position, right? So I can say, okay, spiders. I want to take maybe 30% of that, depending on, again, on your overall portfolio beta. I would look at your portfolio beta right now and make that decision. But let's see what I have. Spiders. So maybe sell 30% or half a position and then sell the other half. Next one would be 430. All right, so I bought at 398. I did trim at 384. I was overly exposed. So now, taking profit at 105. And the next level is 430. So a lot of the decision has to do, again, with your beta, right? I would say if your beta less than 1, then I would not close long position. I think there's more room to the upside. If your beta is greater than 2 or greater than 1.5 of your portfolio, then you're probably overly exposed, and we can have a failed breakout. We could have a false breakout, where we cannot, take out February lows, right? We're facing kind of this long overhead resistance that goes back to February. It's going to take some fighting for the bulls to win. I don't assume it's just going to be straight shot. We already overbought. So it does make sense to trim some of your positions. All right, I did put an order for, same thing, trim XLK position. Right, long XLK position, bought it at 444, closed at 480, bought it at $4, right? Bought at $4, trimmed at 444. And now I have at 480, trying to trim it at 480 and 750. So that's XLK position. Sorry, this is a put position. I'm out of the put spread because I thought market is oversold. So I closed the put spread, and now I'm trying to close the debit call spread. In terms of earnings, we do have Marvel announcing earnings. Marvel continues to go higher. So I did put this order. I'm going to get into it. It's selling out of the money premium, VIX is still elevated, especially the earnings. 45 put, lost 20 basis. I guess I could leave it that, but I think I can maybe come a little closer. So I'm going to sell and try to get maybe 30 basis points or 0.5%. Let's see. $60 stock, so maybe 30 cents, 25 cents, so 48 put. Okay. So selling out of the money put spread, right? If it's a large account, $48 stock, even if you get a sign, let's say it's $4,800, and you have anything above $100,000, then maybe then it's fine. On the $10,000 portfolio, I sold what, 48 put, right? So 48 put, it would have to drop 47, $9, so about 15-20%. I mean, potentially could drop 15-20%. So 48 put, it would have to drop 47, $9, so about 15-20%. I mean, potentially could drop 15-20%. So 48 put, it would have to drop 15-20%. So 48 put, it would have to drop 15-20%. So 48 put, it would have to drop 15-20%. So 48 put, it would have to drop 15-20%. So 48 put, it would have to drop 15-20%. So 48 put, it would have to drop 15-20%. So 48 put, it would have to drop 15-20%. So 48 put, it would have to drop 15-20%. So 48 put, it would have to drop 15-20%. So 48 put, it would have to drop 15-20%. So 48 put, it would have to drop 15-20%. So 48 put, it would have to drop 15-20%. So 48 put, it would have to drop 15-20%. So 48 put, it would have to drop 15-20%. So 48 put, it would have to drop 15-20%. So 48 put, it would have to drop 15- So a little bit more. So you would have to buy a hedge. So I would go in and maybe 48 put. And buy 42.5 hedge. You can increase your return on investment by selling calls. The only thing that I'm a little hesitant, we have this 20% rally. And it's extremely oversold. We see NVIDIA kind of, went from 10% on the bad earnings, went from 10% lower to 6% higher. So I'm not sure if selling Marvel calls is something I want to do right now. So, if it had recent rally, probably like 20% move, I probably don't want to, sell calls, 20% calls out of the money, especially in this environment. So I'm going to pass on Marvel. Let me know if you have any questions. I don't know if you guys have any questions. Ricardo, thank you. CMU, CMU, let's see, Municipal Income Trust Fund. Market cap 98, paying 5% dividends. I mean, it's the same reason. Low volume. I mean, I agree it's worth, watching, but again, it's already kind of the bottom of March 2020, right, and 2017. But then by definition, it means that it will be lower. So if you are looking for dividend yield and you don't mind if it drops, to $2, then you'll be fine, or $3 or $2, then I guess it's fine. But in general, these low liquid names, you do not want to trade if you think there's any chance that VIX will be above 40. Right? If VIX is going to stay complacent, great. I think it's all nice and wonderful. But if you think there is a risk that VIX is going to be at 40, these closed-end funds, there will be no buyers, right? Nobody's going to buy them. So there's no market. When there is no market, very hard. It's going to be, it's tough. It's tough. All right. Osama, yes. So it's a government side. So inflation, government bonds. Inflation. Here, Treasury, here. Treasury Direct, I'm not sure if this is the right site, but you have this Treasury Inflation Protected Security where you can only buy up to $10,000. That doesn't look like that. It looks like some fake site. Treasury Direct. It doesn't look like a government site. So inflation, this risk-free bond pays 7%. Now it's paying 10%, right? This is old site, but let's see. It's limited to $10,000, and you just but you have to go directly on the site. I don't know where the site is. The rates, 10,000 a year, lack of possibility. Department's website. Here. Oh no, it is less. Okay, fine. Then I guess maybe it's wrong. Double check that this is maybe called them, but it should be government site. But $10,000, I think if they pay, current rate is 9.62%. Right, so it's a pretty good deal. Thank you. Cost Autodesk also tonight. I'm a little hesitant, especially Costco. I was thinking about trading Costco. I kind of just don't. It has a multiple of 35. It could be like a Target and a Walmart, right? Especially if it's a false breakout. So I decided not to trade Alter, no Costco. Autodesk is just volatile in general. It's not participating in the rally, so I'm kind of staying away from these for now. Yes, good earnings from Dollar General. It's incredible. Dollar General up 14%. Very strong rebound. Dollar Tree. Very strong rebound to Dollar Tree, 21%. Amazing move. And Macy's, 20%. So retailers obviously oversold and strong rebound. Yeah, thank you, Bob. That's the link. Yeah, I'll put this link here for everybody to share. So, I mean, it is limited to $10,000, but you get, it's government protected. You get 10% return. So you'll get your $1,000 every, month. I mean, every year, and low probability that it will default, right? It's very, probably the lowest probability. All right. Meanwhile, let's see. So we have 5 minutes till close. You know, it's a big win for the bulls, right? It's a big win for the bulls. My personal opinion, it's a matter of time to break through this level, but it can take time, right? It could happen tomorrow. It could happen sometime next week. Maybe it's in the next 2 weeks. I don't know when. Usual, you know, my core scenario would be a pullback to previous support, right? Pullback to previous support, maybe another pullback, and then break. Right, so I think this is a core scenario. Worst case scenario, you know, we retest next level will be 388. You know, depending on the news, maybe Marvel and Costco has dismal earnings. All right, and then you know, if this is a core scenario, maybe we'll get to here. You know, if it's worse than expected, you know, then maybe we'll just get here. Right, but this is my core case scenario. This is my worst case scenario. Obviously, I think this bottom is set, but because we never had capitulation or panic, we can revisit 380 level basically almost any time, right? It could happen, you know, 2 weeks from now, 4 weeks, nobody knows when. I think based on the current price action, we'll probably have a few weeks until that happens. iBonds, thank you, Bob. iBonds, thank you. Any questions? Okay, so just in summary, I did get into credit put spread on Marvel, trying to capture 0.5% profit on the 48 put. I trimmed Spider's position, right, in case it does pull back, and I got more bullish on QQQ, converted from a butterfly to a credit put spread, and trying to close XLK at 480 and 750. And those IWM did get filled, so I did close half of IWM position for the premium service or for shadow service. If you trade in spreads only, I did trim IWM, half of IWM position, and did close NVIDIA short put, credit put spread. That's all I have for today. Thank you very much. I'll see you tomorrow morning. We are changing summer schedule, so Scott will be here on Wednesday, closing bell, and then Friday morning. Wednesday closing bell and Friday morning. Sorry for any inconvenience, but you know, we're doing this for the summer. Thank you very much and have a great day.